Hey guys, what's up? Alec back with the daily stock market, and look at that. Overall, we had a red day in the markets on Friday, but the week overall was green. So that's great to see. We also had Reddit IPO this week. Okay, they IPO'd at around $34 per share and instantly shot up to $50 per share. They're on a downward trend right now to $45 per share. So in this video, we're going to be talking all about Reddit stock, good price points to buy in at, some future predictions, and also GameStop stock is reporting earnings this week on Tuesday after hours, and they're actually projected to have a higher earnings than the last 4 quarters in the past. So it could be super interesting. We're going to be talking all about that. So make sure you stay throughout the entire video so you don't miss out on this meme stock update. We have GameStop down 4% on Friday, 8% in the week, and 22% in the past 3 months. Reddit stock is pretty exciting also because a lot of people are starting to think, can Reddit stock be the next GameStop stock? GameStop has really not recovered. They're down 41% in the past year. They're a non-profitable company. But if you remember back in 2019, 2020, the stock was around $1 per share. And just in a matter of months, we saw from August 2020 to January 29th, just a few months, we saw the stock go up nearly 6,000%, which is absolutely bonkers, going from $1 all the way to $81 per share. So we all know GameStop. We all love GameStop. But the thing is, that probably won't happen again with GameStop. It needs to happen with a new stock. Reddit stock, which we're going to talk about later in this video, can definitely be that next opportunity. However, if we look, we can see when GameStop hits a low point, they typically at least peak back up around 50% or so. It's happened time and time again. So there's still a good stock to trade, especially if you have your finger on the pulse. Now, we need to see it make a lower low, so we would actually need to see GameStop below $12 per share for a swing trade opportunity. And we'd probably want to see GameStop closer to $10 per share or even $9 per share, and then trade it up around 30 to 40% on a swing trade. We're not looking for much more than that, but they are reporting earnings, so it could be an interesting time for GameStop to do something unprecedented or unexpected. The last 2 quarters, they've actually beat earnings twice in a row. So that's at least interesting. They're trending toward profitability, which is huge in the stock market in 2024. It's one of the most important things to look at in a company. Is that EPS profitable? Okay, if we scroll up, we can see the PE ratio is negative 486, which is extremely embarrassing and not at all what you want to see if you are investing on fundamentals. Now, this article was pretty good, so I do want to share it with you guys. AI stocks might be buzzy this week because remember, NVIDIA released their new chip and had that meeting, but don't ignore GameStop. What to watch in the markets after Fed helped lift indexes to a record high, and the Dow almost hits 40,000. Last week was the stock market's best week of the year, thanks to the Feds giving investors hope for interest rate cuts still to come. We have already seen how artificial intelligence has revolutionized the technology sector and the markets. Here's what to watch in the coming weeks. GameStop earnings. Global video game retailer GameStop will report earnings Tuesday after hours, which we already know. Sorry for all the ads, by the way, but just stick with it because this article is good. GameStop reached its peak in 2021 when a group of small investors encouraged by Reddit community, Wall Street Bets, and helped along by Elon Musk's tweet caused the stock to skyrocket 1,000% in just 2 weeks. Okay, insane. We already kind of went over that, so let's briefly kind of go through this article. GameStop has not experienced significant growth in some time. It's now trading at only $13 per share when it was high as $400 per share in the past. Revenue performance and operating margins will be important to monitor in the upcoming report as they may affect the stock's price. The AI stock rally keeps rallying. Google, Apple, Microsoft, everyone wants a piece of AI. Apple wants to integrate AI. Google parent Alphabet is already working on it. An AI chip firm like Nvidia and Micron are experiencing stock surges, and the hype is unlikely to die down anytime soon. Now, going further into the analyst article, we can see I expect GameStop to beat analyst estimates for revenue and EPS on strong video game sales in Q4 and prudent cost management. My price target for GameStop stock is $21 per share, implying a 62% upside. And if you get in a little bit lower, closer to $10 per share, there is even more upside there. While the stock is nowhere near its peak reached during the meme stock mania, GameStop has the potential to rebound from current levels, in my opinion, when it posts its Q4 and full year 2023 results on March 26th, after the market closes. Analysts expect the video game retailer to report Q4 revenues of $2.05 billion and EPS, a positive EPS of positive 25 cents per share, which is another bullish thing. Whereas the full year estimate are $5.53 billion in revenue and an EPS of 13 cents per share. That said, I expect GameStop to beat analyst estimates due to stronger video game sales during the holiday season compared to 2022. Although my model forecasts another year-over-year decline in sales, I don't believe the projected decline warrants the discount the stock is trading at relative to its peers. As such, I'm rating GameStop with a buy price target of $21.18 per share, representing a 62% upside potential. And by the way, this is an analyst article. This was written by, you can see his name right here, Ahmed Abadalzim. I probably butchered his last name, but at least you can look him up and see how warranted this analyst is. And also, you could pause this article and read through some of it yourself, because we aren't going to dive into this full article, but it is definitely interesting, so it could be worth it to pause this video and go through some of these charts and graphs if you are extremely bullish on GameStop, or if it is a big part of your portfolio. So yes, GameStop could be undervalued, and it also could be a good swing trade to buy and trade up to around $20 per share. Okay, so moving on, let's talk about Reddit stock, ticker symbol RDDT. This is a new stock, and remember, Wall Street Bets community is on Reddit. Wall Street's bet community is the one that made GameStop go parabolic. If we scroll down, we can see that this came to market with a market cap of $7.3 billion, okay, and a PE ratio of negative 80. They came to market as an unprofitable company and demanded a $7.3 billion market cap. Okay, they listed at $34 per share and instantly shot up around 48%. Most people weren't even able to buy in at $34 per share, and most people are in at around $45 to $50 per share. In my opinion, we'll see Reddit come back down to around $34 per share or under. So personally, my price targets are set around 35, 31, 28, and ultimately $25 per share is where I want to buy the most shares of Reddit and start a serious position in Reddit at around $25 per share. And in my opinion, that's still even a little bit high, that $25 per share. Now, there is no guarantees that Reddit will drop down to $25 per share. Anything can happen with Reddit. This is a meme stock and a momentum stock at the end of the day. It could get picked up by the Wall Street Bets community and fly up to $400 per share for all we know. Now, in my opinion, I don't think that's going to happen just yet. And that's why my first price target's around $35 per share, because I definitely think it'll at least get down to $35 per share. And Reddit actually does have some surprisingly strong fundamentals. So let's dive into that now, and I'll show you some of my concerns, but also what I'm impressed by as well. So now that Reddit is a public traded company, we have access to its total revenue, income, and balance sheet. And let's start off with what I'm impressed by. We can see that the total revenue is growing year over year over year. From 2020 to 2023, we can see it's grown from 228 million to all the way to 800 million, almost $1 billion in revenue, which is extremely exciting. However, if we go over to net income, it's what I'm not impressed by, because they are still not able to turn a profit, even though they have around 800 million in total revenue. That's not equating to any money made or net income. Another thing I'm extremely impressed by, and this is why I actually want to buy the stock, is the balance sheet is unbelievable. Look how much cash they have. So therefore, if we look at the balance sheet and we put together, they have $1.6 billion in assets. That's absolutely bonkers. You will be hard pressed to find. You can search the stock market far and wide, and very rarely, maybe a 1% or less of companies, 0.1%, have a $1.6 billion in assets and only $155 million in liabilities. It's extremely interesting and extremely captivating that their debt to asset ratio is only 9.7%. So this is what personally attracts me to the stock. If we see that going up, though, their liabilities climbing higher and higher and higher, that's going to be a red flag, in my opinion. I want to see that debt to asset ratio staying strong, below 30% at least, and them keeping the cash and cash equivalents and assets in general as high as possible. Also, it's not too concerning that they're not generating a profit just yet, because their extremely strong balance sheet. That's why I'm not too concerned about the profit. However, analysts and Wall Street in general and the stock market is going to be concerned that they are not generating in a profit or making any money from that $800 million of revenue they're bringing in. They're still not turning a profit. However, someone like me, I could see the value there. They're not too concerned with making a profit right now because their balance sheet is off the charts. They have so much cash on hand. They're not worried about it. They have $1.6 billion in assets. So it'll be interesting to see if someone was watching this and they know how to look into a stock, it'll be very interesting to see where all that revenue is going to. So if anyone wants to do a deep dive on where that total revenue is going to, is it all going to research and development? Are they trying to make the next new AI? Is it just cost a lot to keep the platform up and running? Let me know. Comment in the comments below. That'll help everyone out. I'll make sure I pin that comment as well. But overall, Reddit is not just a meme stock or a momentum stock, but it actually has a pretty strong fundamental case behind it as well, especially to see that revenue growing. They're obviously a growth stock, not just a meme stock. Okay, they might be a 3P, which is a meme stock, momentum stock, a growth stock, which typically looks at revenue. We can see that the revenue is growing like crazy, double-digit growth every single year, and also a value stock. Once they become a profitable company, it'll be easier to tell if they are a value stock at that time. However, because they're not a profitable company, it is very hard to tell if they're, it's justified paying $40 per share for Reddit stock. So looking at the balance sheet, I think it ties it all together, and it really minimizes my risk. As long as I don't see that balance sheet, the liabilities creeping up and the assets creeping down, I think my risk at $35 per share is very solid at that point, and I'd be willing to hold it for at least a few years and track the balance sheet to see how it's going, where it's going, if it's getting better, if it's getting worse, if they're getting the profitability is another strong, important thing to be tracking every earnings to see if they can get to that profitability mark. So thank you guys so much for making it to the very end of the video. And if you learned anything at all, or if you just appreciate the content, smash a big thumbs up on this video, share this video with a friend, and also consider joining my close friends list, my private trading group, where we now have over thousands of success stories. We can see last week we had some winners pull through in the group. up 240%. Another W, and the list goes on and on. You know, you can go through these on your own time on the highlight section of my Instagram. Success 2024, success number 9, success number 8, success number 7. The list goes on and on. We've had so much success over the last few years, so there's no reason why you can't be one of the next success stories. Just reach out to me on Instagram. Now over 228,000 followers, 890 posts. Message me here. I'll get back to you in the same day and shoot you over my website so you can see how much it costs, and if it's inside your budget, be more than happy to get you started and make some money in the stock market together. 2024 is the year of stock market success. Stocks are at an all-time high. Options are at an all-time high. Volume's at an all-time high. Crypto's at an all-time high. So make it this year to learn how to make money while being remote and while on your phone. Making money from your device, your phone, your cell phone, your computer is the best feeling in the world. So reach out to me. I'll show you guys how. I'll show you the ropes. If you're an absolute beginner, that's okay. I've had tons of people I've shown the ropes and mentored over the year that were a beginner just like you. So message me there. Thank you guys one last time for all the love and support, not only on Instagram, but also on YouTube. Like these videos, and I'll keep making them for you. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.